If you are trading gold without the specific concept that I'm about to teach you today, you are more likely to lose your entire account instead of make profit. I have blown enough accounts to know exactly what fails and what actually works on these charts. If you're serious about trading, watch this full video because I am breaking down the one strategy that I used to finally master gold trading. This will save you months of struggle and give you the exact rules that you need to stay on the right side of the trend. All right, let me get right into the details. I'm going to start off by telling you something that you 100% probably don't know, and that is this. Gold is the best for my strategy from 8 p.m. Eastern to 12 p.m. Eastern, okay? So if I go to the 5-minute time frame and if I use these vertical lines right here, it is going to be best from about 8 o'clock, which is going to be 2000 right here, to about 12 o'clock, okay, or midnight, okay? Now, can it be good during other times, such as in your kill zone from, maybe 8 a.m. to 12 p.m.? Yes. Is a little more hit or miss? Yes. Obviously this is very good price action, better than this, but I found that on the lower time frames, especially like the 1 minute, it's going to be the best from 8 to 12 p.m. Eastern. Now, with that being said, you will still get A+ setups on any single time as long as it's an A+ setup and it just looks really good. It will likely work. So for those of you who don't know, I trade inversion fair value gap. So I'm going to teach you my inversion fair value gap strategy on gold and show you what you should know on gold compared to, NQ if you trade it there. So for starters, the main thing that we're going to emphasize on gold and really emphasize is really looking for that higher time frame or HFT zone. So this could be, a fair value gap or an inverse fair value gap that we may be delivering off of. So like the main thing I look for in gold is on the 1 hour, 15 minute, 4 hour, daily or weekly. I'm always looking for us to be bouncing off of something. I think if there's a liquidity sweep, in this zone, it's a little less important. There just needs to be a zone. Okay. So like if we do this, it's still good. But if we don't sweep liquidity and we just get this, it's still the same. Higher time frame zones are very important on gold. And you can see I actually messed this up a little bit, but this is the key thing I'm looking for. Now for my strategy, what exactly would I look for? Well, I look for us to tap into this. It needs to touch it. Okay. If it comes like this and then bounces, it doesn't count. It needs to touch inside the zone, and we need some sort of inversion fair value gap on the opposite side of the curve that we are inversing for me to take along. Okay, but the single-handedly most important thing of this whole video is going to be using this higher time frame zone to tap into and then getting an inversion fair value gap off of that level. So let me just show you a few examples. So every time I go on gold, I mainly start with the hourly time frame because I think that's just the most obvious most of the time. If you don't see any gaps in the hourly, go to the 4 hour, go to the 15 minute. But as of right now, you can kind of tell there's these 3 obvious gaps. So I'm going to kind of combine these and draw them out. Now, right now, I would say this is obvious. And then I would probably say maybe this zone is obvious here. So I'd probably say these are like the 2 zones we're in between. And you can clearly see this one can't break, right? This fair value gap here, fair value gap here, fair value gap here. And you can see this one actually did break, okay? Now, at the time I'm making this video, we got some big news about Venezuela. So I believe gold is going to gap up here. So, but again, it kind of just proves why I don't really care about anything from 6 to 8 o'clock. When the market opens back up, I'm gonna let the market do its thing, and it's probably gonna be a big gap up, and then we'll see how we react to the zone. So for the next session, like if you were trading in this example, you're probably gonna wanna use this zone because it's just the most obvious and dictate whether we're bearish or bullish, depending on when you hold it. So if we gap up and we end up closing above these 3 zones, you're going to be looking for long setups back to the high. Now, of course, this is negative RR, but what you would do is if we close back above here, you look for like a little confirmation setup in the lower time frame from this zone. And that would be your higher time frame support zone. Now, let me show you 2 to 3 live examples. And I'll also utilize my indicator as well, showing you what setups you could have taken and how important it is to be delivering off a higher time frame zone. So in example number 1, you can see this giant gray zone is the higher time frame, which I just marked out in the hourly. Now in the 3-minute time frame, you can see my indicator alerts a short here, okay? And if you know how my strategy works, you want every single gap in the break. And you can actually see when it alerted the short, it only broke this one, but not these ones. But it's still a valid entry once this closes below, and you could still get in and then put your stop above these zones here. Okay. But the important part is it swept liquidity, which, you know, is not required for gold, but it sweeps it very, very strong death candle down again, closes below all these zones, and you could have gotten in. Now you're probably wondering, like, why wouldn't you take this one? Well, this one, you're just tapping into this fair value gap and you don't really know if it's going to break, right? Versus this one, when we close below all these zones, you don't have any more fair value gaps to the left. The next one would be all the way down here, and that's where you could theoretically go break even if you wanted, right? Same thing with this one right here. Yes, it closed beneath this, but we never end up closing beneath this, and when we did, it just wasn't really a good close right here. Versus this one is more of like a V-shaped death candle type vibe, and that one we already have a bunch of engineered liquidity in terms of a trend line right here. So you can see out of all these three entries, this one's not really valid, tapping into this one just not obvious, broke this one but didn't break these ones, and when we did, it just took too long. And this one is the most valid because V-shape, delivery out of the zone, swept liquidity with a very bearish reaction in hindsight right here. And then if you're watching, you know, obviously my indicator, which you don't need, is alerting the entry here, but you'd enter here because that's when it breaks all the zone. Now, another example, if you miss this entry, is down here. Same type of vibe. This I call a confirmation entry, where we tap into a lower time frame gap here, which is an important delivery point, and at the same time, we're in this giant hourly higher time frame zone still. So what can you do? You look for an inverse off of this. Here it is. Indicator obviously alerts this one, but you don't need it. You know, you could have taken this yourself without the indicator. It doesn't really matter. And then again, you could just target the low, go for a nice 2R, or you can go for a higher time frame level down here. This one right here is not as good. Yes, it works, but this one is 10 times better because we're actually inside the zone and we tapped into the zone right here. Now, let me show you two bullish examples just so you can see the other side. Now, here's a bullish example right here. You can see, again, here's the entry right here when we close above this fair value gap, and you know, you might want to target the next internal high because it's about a 1.5 R, right? I only target for my strategy about 1 to 2 R. I don't really target higher R. That's why I have such a high win rate. I have probably about a 70 to 80% win rate. And again, I like the high win rate. I don't like the low win rate because it's just bad for my psychology and my personality and how I like to trade. Now, was there a super obvious liquidity sweep for this one? Not really. However, was it delivering out of a higher time frame zone? Well, this is the 5-minute, and you know, so far no, but it was holding a 5-minute inverse right here, which does count. And if you go to the 15-minute, it was delivering from a 15-minute fair value gap / balance price range right here. And you can even see it was a 15-minute and 5-minute entry where, you know, you can see we closed right here as well. And for the same example, if you zoom out even further, you can see that there is also a 1 hour fair value gap over here. We are still holding off this initial leg to where this would be the confirmation setup off of this 15-minute. So I'm always looking for a zone to the left that we're delivering out of. It's the most important, and it will keep your win rate high. And if you don't look for the zone and we're not delivering out of a zone, your win rate is probably going to be much lower. And last but not least, final example right here. So you can see we have another kind of V-shaped type vibe. In this one, we actually sweep liquidity over here, as you can see, and we deliver out of this 15-minute gap here. So not only do we sweep liquidity, but again, still has that higher time frame, untapped, unmitigated zone to the left. And again, you want to see this type of reaction off the zone. If you don't, it's probably going to break, right? I call this, you know, a hammer candle, and, you know, trading retail concepts knows this is a hammer candle. Everyone knows this is a hammer candle, and this giant wick with a small body, or, you know, this a bigger wick than a body, is what you want to see as a reaction out of this higher time frame zone. It's the most bullish signature and price that you could have off of a candlestick, and you know, you really want to identify that and understand that it's a variable signature and price, and it's probably a good idea to get in. So you can see here's the entry. Okay, obviously my indicator alerts this one. It will alert most ones that I'm showing you because obviously it's a good setup and I coded it that way. But again, what can you target here? You could have targeted these relative equal highs, which again, a lot of stop losses here. But it just shows that every single time I'm looking for plain gold, make sure we're delivering out of a higher time frame zone. The ones that are not are very, very hit or miss, and you should be patient and wait for for the ones that are. Congratulations, you made it to the end of the video, and that means you're dedicated to actually becoming profitable. Make sure to implement this stuff I taught today on gold. Again, like I said, the best time to trade gold is 8 to 12 p.m., but theoretically, you could check at all times of the day. You just need that higher time frame zone delivery and good, solid momentum price action. Once you implement this stuff, hopefully you'll see an edge, just the way I see an edge over the markets, and hopefully you can become profitable and pass a couple prop firm challenges. If you haven't already, make sure to check out Apex in the link in the description. Use code Dodgy. There's a bunch of other prop firms if you're into those too. Code Dodgy for every prop firm, but I like Apex because you can trade the 20 accounts. Trade smartly, and I'll see you guys in the next one. Peace.